Good evening, I am Ken Mijungu with the latest in business, and today we begin in the insurance sector. Another medical insurance provider has opted to rope in a strategic investor to bolster its growth strategy. Resolution Health East Africa has signed a strategic partnership agreement with Africa Development Corporation that will see the investor take up a 25% stake in the medical insurance company. K24 Business News reporter Migwi Mwangi looks into what this partnership means for the 8-year-old medical insurance provider.
Resolution Health East Africa is the second medical insurance company in a space of 2 months to boost its capital base through a strategic partnership. A German-based private equity fund, Africa Development Corporation, has bought out a 25% stake in the company for 184 million shillings. The strategic partner will get 3 out of 7 seats on the company's board.
We really strategically develop the investments that we invested in, support them not only financially but also via know-how, and are here always for long term. We consider most of the countries that we are in, including Kenya, you have an unbelievable strong growth during the past years, but you see that there's still a huge potential, and we are here in Africa to tap into this potential on a long-term basis.
With the injection of an additional capital coupled by international expertise, the medical insurance provider is now setting its eyes on the regional expansion. But not before it strengthens its local presence. The company currently takes care of 42,000 individuals and 870 companies in Kenya.
Expansion for us is 3-tier. There's new products that we are going to launch here, opening of new offices in Kenya, expansion into Uganda, Rwanda and South Sudan. We are already in Tanzania and doing pretty well. And the third one is acquisitions. You might see us acquiring a couple of partners in the local market.
According to the company's Chief Executive Officer, Peter Ndwati, Resolution Health is now looking to grow its market share to 20% by 2014. And once that is achieved, the company hopes to transform into a public quoted company on the Nairobi Stock Exchange.
We could do it earlier. But we felt we do not want to list until we have market leadership. We currently have 11% market share out of the 5 billion that is written. We feel we need to have at least 20-25% market share before we actually list. That is doable. We are growing at 40% average, so we could do it earlier than 2014.
That optimistic growth outlook is in line with the current growth levels being witnessed in the medical insurance sector, estimated to be at 25% every year. According to the economic survey, the value of the health services industry in Kenya has risen from 33 billion shillings in 2004 to 51 billion shillings in 2008, with annual premiums in excess of 6 billion shillings. Migwi Mwangi, K24 Business.